Thank you for attending today's webinar. My name is Brian Livingston and I lead the Oakland's building materials team. Great to see that looking at this, we're absolutely delighted. We've got nearly 100 people on this call from 16 different countries joining us. We've a couple of great speakers lined up who we're grateful for sharing their insights into what is an industry that's going through a very exciting transformation. Very quick introduction. I'm the global head of the Oakland's building materials team. I've got 20 years, I've got 30 years experience in M&A and completed over 200 transactions. More interestingly, we've got Jason, and Jason is the Group Innovation Director of Genuit. For those of you who can recall that Genuit was previously known as Polypipe, and it's 25 years experience working in a variety of senior marketing roles. And the third of our speakers who brings some thoughts across from America, who's a managing director at Oakland's TM Capital, and he has 35 years experience in the building products market, and he's going to talk about some of the exciting transactions that he's done later on in the webinar. So who's Oakland's? Well, just a very quick one. Oakland's is one of the leading global advisory firms for mid-market companies. And in terms of we are sector verticals, and in terms of the building transaction in the last 5 years, between 17 and 21, we completed 163 transactions, of which 34 were cross-border. Oakland's has 850 dedicated professionals, as I said, working in 15 sector verticals. The team as a whole at Oakland's have completed about 6,500 transactions. So we really feel that we've got our finger on the pulse. And perhaps the most important thing is to talk about some of the trends that are coming across. And this is the idea of today, both from America, in Europe, and then of course, perhaps with a real practitioner who's experienced some of these quite interesting and innovating trends. So what are we going to try and talk about today? Well, we're entering a time where the building materials supply chain, from manufacturing to distribution through to constructions, are facing significant challenges. And we'll talk about some of these. And these range from everything from people not wanting to work in the industry, through to just trying to get employment, through to simply the green issue. So, and then but the areas we're specifically going to focus on: sustainability, digitization, and automation. And the webinar looks at the opportunities and threats of these growing trends, and in particular, what we're quite interested in is how might they actually affect a company on a day-to-day basis. Put bluntly, how much will it add to the value of your company? Or for some, how much might it detract if you don't do something? Jason is Group Innovations Director at Genuit. And Genuit is a company with an EBITDA over 110 million and a market cap of over $1 billion. As I said, it was formerly known as Polypipe, and it's specifically known as a manufacturer in the water, climate, and ventilation management solutions globally. Genuit, as a company, focuses on that it has a major role in making the built environment more sustainable. It's made significant commitments to low carbon business, and that can deliver sustainable solutions at scale. Among its key targets, the business is committed to 62% reduction of tonnage used to manufacture its products, being made from recycled materials, and to reduce its CO2 emissions in scopes 1 and 2 by 66%, all by 2025, which I must confess, Jason, I'm quite surprised you managed to make it here today, because that's one hell of a target. The drive for sustainability at Genuit has been reflected in some of the group's recent transactions. So they acquired AD Innovation for 210 million in 2021. AD is the UK's leading provider of magnetic filters and chemicals, improving energy efficiency, protecting against magnetite and other performance issues in water-based heating systems, and improving energy efficiency. In the same months, the company also acquired New Heat, a UK-based supplier of warm water underfloor heating and integrated renewable solutions. Consideration for that acquisition was 27 million, and allowed the Genuit to move into climate management solutions. Jason has had quite a number of years at Genuit. I think he's had 25, correct me if I'm wrong, and he's worked as innovation director for the last 3 years. His current role is to concentrate on climate and water management, digital integration, decarbonization globally, with a particular focus in UK, Europe, and Middle East. He's heavily involved in driving Genuit to realize the ambitious sustainability targets they've set, and to address some of the most challenging areas that affect the building industry. These challenges, as I said earlier, involve increasing skill shortages, adapting to the increasing skill shortages in the industry, as well as supply chain vulnerabilities. Jason, therefore, is really well placed to give us an insight into perhaps where the industry came from, where it is today, and perhaps most importantly, where it will go tomorrow. So Jason, thank you for taking the time to talk to us.
No problem. Thank you, Brian.
So Jason, a couple of quick questions, if I may, some questions. Would you agree, Jason, with the idea that the building material and construction industries are witnessing a period of significant change?
Yes, I think it's fair to say that, as you said, in my 25 years in the industry, the pace of change at the moment is probably as fast as it's ever been. We've seen quite a lot of new emerging trends that really we never had to face in the same way in construction. Things like drive towards net zero and the implications of that in the built environment, increasing investor focus on environment and sustainability. It's partly why we've established the metrics that we have. So we've got transparent reporting around our sustainability ambition. The clear need for the built environment to be more resilient as a result of climate change, and the drive to make construction smarter and therefore more productive is also something that's coming across quite strongly. More latterly, particularly in the UK sense, but I know it's important globally, is the whole building safety agenda. So there are a number of things right now that are sort of hitting us all at once, which is why it's quite a dynamic sort of market to be in terms of innovation and in terms of business development, if you like.
Okay, so there is a lot of changes, and you've highlighted some of the ones, but could you go into a little bit more detail about some of the major changes within those that you've been talking about? So what are the sort of key
I think
changes?
From my point of view, we're looking at, and there's sort of four almost sort of macro trends that we're seeing. The first one is sort of the need to tackle climate change, and that's what's driving the decarbonisation agenda. So the kind of real term impacts that that's having on us is, one, clearly we as a business are setting our own targets for decarbonisation of our business. So we're seeing customers requiring us to set our own net zero targets using science-based methodologies. So we're currently working through that now to extend our sort of 66% in scopes 1 and 2 emission target by 2025. So our science-based targets will include scope 3, and that's coming strongly from governments in terms of their procurement strategies, that need, if you like. But we're also seeing a drive towards low carbon products as contractors and developers try to drive out carbon, both either embodied carbon in the buildings they're producing or operational carbon. So that's the first one I would sort of.
Jason, can you put some more flavour on that? How is that happening? Give me something. I was about to say concrete, probably the wrong word to use.
No, well, concrete's actually a really good one when it comes to decarbonisation, because concrete's one of the biggest carbon sinks in a building, concrete and steel. But the way we're seeing it is really in different technologies. So the big one right now for us is the change from gas-fired heating systems to air source heat pumps and ground source heat pumps. So technology which is ultra low in terms of carbon, and in fact combined with green electricity is actually zero carbon. But that not only has direct effects in terms of the heating and the properties, but also consequential effects in the terms of the pipes that's sort of come off those boilers or in the types of heat emitter. So you mentioned new heat earlier on and underfloor heating, and that's a great sort of way of heating houses off air source heat pumps, for example.
Mm-hmm.
I would say the other one, David, is, so we talk about decarbonisation, is actually consequences of climate change, and how do we manage the consequences? And that's where a lot of our activity has been in things like the Alderborough acquisition, but also our own organic growth around flood and water management solutions. So whereby we're trying to offset the increase in rainfall propensities by developing solutions to store that water and prevent places flooding. So they're two carbon and sustainability related. In terms of smart productivity, productivity is a real issue. So we see more challenges around attracting people into the industry and trying to make construction more productive. I think it's a global trend that construction productivity tends to lag behind other productivity measures. And I know that in different countries as well as the UK, they're looking at things like modern methods of construction to try and help boost that productivity, but also as a way of sort of offsetting the loss of skilled and experienced older generation and the challenge of actually recruiting a newer generation to an industry that's not always seen as a sexy place to be.
That's interesting. So that skills gap and labour shortage, is that really hitting you pretty badly? And what are you trying to do? How are you trying to address that?
It certainly is in the UK. There's no doubt about it. And the way to deal with that is to look for different solutions that reduces the amount of manpower or lady power that's required. So we've seen a move to things like off-site construction. So we've got facilities now for manufacturing products off-site in the factory and shipping them for installation on site as pre-assembled units. We're seeing quite a high growth in factory-built houses, for example, in the UK now. So that's a market that's developing and wasn't there realistically 3 years ago. So it's still quite new, but it's gathering at pace. And I believe that's also happening in a lot of countries around the world. Okay.
And in terms of adapting to the changing government regulation and environmental challenges, talk to me about what are the key areas you see in that at the moment?
The key things about adapting are those environmental areas. So it's about having the solutions that allow the built environment to become more resilient and for them themselves to adapt. And what that's requiring is for us to think about new product solutions that we need to acquire or need to develop. So we're identifying areas that perhaps historically wouldn't necessarily be our core, but actually are really quite nicely adjacent to the services that we can provide by our piping systems and our core and traditional systems.
Could you give me for instance for that?
So if you look now at things like what I call geocellular attenuation. So these are attenuation boxes that go into the ground and wrapped in a polyethylene sheet to attenuate water or to allow water to soak away. That market sort of started back in about 2005, 2006 in the UK and has grown to well over a 120 million pound market. But it brings with it a need for a different type of skill set to that which we would traditionally have had. It's much more engineered as a system in terms of its installation. So we need engineers and we need a different talent pool, if you like, to be able to sell these new sort of methodologies. And similarly, it's the same with heating and ventilation in terms of how we ventilate and how we try and deal with things like the urban heat island effect, which is a consequence of climate change. As we try to make buildings more carbon efficient, we insulate them. When we insulate them, they become hermetically sealed. When they become sealed, the need for better ventilation grows. And so there's a whole growth and attractive area around how that can be done efficiently, etc.
So am I hearing, just test my understanding on this, am I hearing from you that basically you're changing the nature of the job? So you mentioned engineers, that you traditionally wouldn't have. You're changing the nature of the product because you're having different product, and you're changing the way that you're making it. So it's everything. I mean, there isn't anything left really from that, is there?
No, it's been
incredible
quite significant. Like I say, I've been in Genuine 25 years, and the last sort of 10 years have been, the most rapid in terms of business developments, in terms of, what we do, but also how we do it.
So
I
yeah,
think that's
okay.
very fair
So
to
what
say.
we're saying, yeah. So what we're saying, apart from who makes it, who makes it, how you make it, and what they make, everything's the same. That's quite an incredible concept. Okay, what I love sometimes in this business, it is full of jargon, and sometimes people talk about the circular economy. Can you talk to me what that means to Genuit and how it links with other risk areas in your business, such as supply chain risk?
Yeah, I think so. The first thing for us is perhaps, hopefully for the audience, the sort of modern world has grown up on a linear sort of economy model whereby we take and consume resources from the earth, we use them and we discard them. The circular model is aimed directly at dealing with that effectively. So, the principle, as you would expect in a circular economy, is one is first of all to try and reduce the resources that you consume. The second one then is to try and reuse whatever you can of those resources so that they're not discarded. Where they do have to be discarded, it's about recycling those resources. So ultimately, it should lead to a decrease in resource and a prevention or a minimization of resource depletion. So that's what the circular economy is about. For us, what that means primarily is about, how do we efficiently consume our materials. We're I think part of the clue is in our previous name, Polypipe. So we're a business that consumes circa 150,000 tons of plastic per annum to manufacture our products. But we're proud to be able to say that roughly 50% of that is all from recycled materials, because it's something that we've done since the 1980s, and it's something that we're looking to expand. In fact, one of our investor KPIs is to actually increase that percentage from 50 to 62%. It's a great thing, but that brings with it some challenges. The kind of things that we've had to do to sort of participate in that circular economy is make different investments. So an example of that, which we wouldn't have done 10, 15 years ago, is we have our own sort of bottle recycling facility. So we take bales of polyethylene bottles, in the UK, milk bottles. Your attendees from other parts of the world, more like detergent bottles, shampoo bottles, and we actually recycle them ourselves, reformulate them, recompound them, and use those to manufacture quite a lot of our piping systems.
Incredible idea that you actually are going so far down, that vertically integrated chain where you're actually recycle. You're right. 10, 15 years ago, even less, 5 years ago, I don't think I really would have thought of you as a recycler of plastics, but you are now to control your supply chain.
It's about controlling the supply chain, very much so. I mean, we've used recycled plastics, I say, since the 1980s, but it's becoming more and more important, not only to us, but to other people. That's why we made that investment, to give us the quality of material, the consistency, but also to give us some ownership of accessibility of that material.
Interesting. You mentioned two of the key challenges facing the building industry are low productivity and attracting and retaining top talent. Do you think that is one of the drives towards digitization, or to what extent do you think it is?
Certainly. Yeah, no, absolutely. There's if you look at any of the cross-industry sort of initiatives now, a lot of them are talking about talent. How do we attract new talent? And there's no doubt about it. The drive towards the digital construction is part of how the industry sees its ability to attract a next generation of engineers in, and that's sort of understandable. We've grown the generation now that my children are in, have grown up in the digital world, and they've been building things in some of the games and the software they play since they were very young. So to be able to perhaps think about how they take some of those skills and transfer them into the real world by using sort of digital techniques is something they're actually really familiar with, and there's no doubt about it. That's one way in which we can attract younger talent in and use the skills that they come inherently set with, as well as can be trained in, to help us think about ways in which we can modernize and increase productivity in construction. So things like digital twins, where we now have a physical building, but we also have a digital twin of that building, which allows us to, test and experiment with how we heat the building, for example. Are all things that we do now. That that's at the sharp end, and people will have heard about, virtual reality and augmented reality. These are all being used in today's modern construction environment now.
Fantastic. And people talk about the fact that the building industry, the materials are changing, and and even the definitions, the things like remote monitoring and other forms of smart construction, changing what we define as building materials. What do you think about that as a concept? What do you think about that as an idea?
Yeah, no, it's becoming more and more important. The biggest driver of that we see is primarily to help with the decarbonisation agenda. So we're seeing now systems whereby controls are being used in the Internet of Things to control things like your heating much more cleverly than perhaps can done before. So a specific example would be things like weather compensated controls for things like your underfloor heating. So controls which not only learn how you use them, and so automatically set themselves when you enter a building with advanced features like geolocation, so they can actually set themselves up when they know you're coming home, because they can track your movements if you allow them to, but also are able to sort of predict what the weather event might be in the next couple of hours and adjust the settings accordingly.
Amazing.
And we're doing that in the heating area. Another area around flooding prevention. We've recently launched a product called PolySync, which does the same thing really, but it's flood resistant on buildings. So we're storing water in green roofs on buildings and irrigating those roofs. But we have an ability now to detect when rain is likely, to dump the water out of those storage tanks to make space for more water to be placed in there, and then controlling the water from the building to prevent flooding at the same time as being able to make sure there's water there always for irrigation of those plants and sort of regreening the urban environment. And that's all coming about from smart technology as well.
So what we're actually seeing really is the morphing in many ways of the electronic controls environment into the building sector, which historically they were, one was very clever and one was less clever. So the building sector is really teching up today.
Yeah. And I think what we're seeing is, more controls about remote monitoring, so people can see what's happening in their buildings and can take, decisions based on that information. So the whole concept of more of data, the need to have data on your asset as well as the physical asset is actually quite huge, both for buildings but also for us as product manufacturers. We've got as much emphasis on our data for our product now as the physical performance of that product.
Okay, and as an M&A practitioner, I'm going to, the next question is going to be, it's got to be, look, everything is changing. So how is it changing your acquisition strategy? And that, are you going to use an acquisition strategy to meet those which are incredibly demanding targets? Yeah,
I mean, undoubtedly, it forms part of any consideration of any M&A activity. I mean, the first thing to note is it's exciting to know that it gives us opportunities for M&A. And you can see that in some of the acquisitions we've made. So, you mentioned AD, which is all about, keeping heating systems efficient. Again, part of that decarbonisation agenda. You mentioned NewHeat, which is about heat emitters, working with low source heat pumps. I could also mention Permavoid, which is around green urbanisation and managing water in the built environment in a sustainable way. Alderborough, which is about how we store and manage big quantities of water to prevent flooding. So, we've made a number of acquisitions just in the last 3 to 5 years that are driven by the decarbonisation and the climate resilience agenda. But equally, it's fair to say that how we make our M&A decisions is likely to have an impact from how sustainable businesses are as well. Now we are setting our carbon and decarbonisation strategies for us as a business. And that means we will obviously be looking to acquire businesses that have, equally the right level of focus and attention on their own targets. When we've got science-based targets, for every acquisition we make, we're going to have to rebase our targets. And so therefore, if that means that the carbon impact has gone up and then we've got to spend money to offset that, then that will be part of any likely consideration in the future.
Fantastic. Jason, many, many thanks. We may hopefully have time to come back to you. I do appreciate you giving the time. I'm going to turn my attention now across the pond to Mr. David Feltz. David's a managing director at Oakland's TM in Atlanta. Oakland's TM Capital is a leading mid-market investment bank in the US with offices in New York, Atlanta, and Boston. David has over 35 years experience. I think he only put that in, so he's got more than me, representing many well-respected mid-market private firms, but he's particularly focused on the sell side and massive experience with private equity. Building product sector, his particular expertise in equipment rental and dealers, outdoor and consumer driven building products, and home and technical textiles. Recent transaction that David's going to talk about included the sale of residential steam shower provider Steamus to Masco and the cross-border sale of omni-channel flooring business Kelly Brands to Victoria. David will tell you, but Kelly is headquartered in San Diego. It's a highly disruptive online-first omni-channel platform offering a range of flooring solutions, decking, and home decor. And Kelly is the strongest emphasis on sustainability, specializing in green building materials. It aims for the greenest possible option in every category. And it was bought for $104 million by Victoria PLC, which is a leading UK company. Steamist is a leading provider of high quality steam showers and luxury shower accessories sold under various brands. Highly innovative company and makes use of digitization to manufacture a highly simplified product that can be used by regular plumbers rather than relying on specialized contractors. And again, with a market cap of over 14 billion, Masco is one of the global leaders in branded plumbing and decorative architectural product. Given David's unique experience that he's been around one hell of a long time, he's probably better qualified than most of us to give us an idea of the current market trends in the US building industry, and also what's the effect of innovation. And I will sneak in a difficult question to David at the end somewhere, which is, how much difference does he think in pricing fitting these criteria make? And I will pressure you, David, on that one. So
sure.
Over to you, David. The first question I wanted to ask you is, we are seeing, I saw the Fed today put interest rates up. I think it was today, was it? So the markets, the world is getting pretty difficult out there. What's the outlook for building materials market in the US?
Yeah. I mean, that's a big question, especially on a day-by-day basis. So we do quite a bit along the continuum of the building products category. It gives us, as a firm, a lot of touch points to the channel. And, we really see two in the States and arguably more globally, two big competing patterns or trends at the moment. And one is what we would call a building products super cycle. If you look in the States from residential, we remain terribly underbuilt, under inventoried and available new homes for the population. The Gen X and the Gen Z, which are in their home buying ages and about to enter, there's a total mismatch there. So the demand side for residential goes on for years and years and years from now. On the commercial side, something like 80% of commercial buildings are over 25 years old. We just listened to Jason talking about the built environment needs to, think and build and manage spaces in a very different way. These are old buildings that require lots of investment, lots of renovation or rebuilding. And so that super cycle is there, contrasted with the moment, which is, consumer concern, mortgage rate increases, just prices. I mean, the prices for home in the US is driving a lot of buyers, making them less able to buy a home that's affordable. But what we're seeing them is therefore going down into cheaper homes, maybe homes that need more renovation and remodel. And so they can get an access point, they can get a home, and then they're going to need to spend some money on the backside and more in the aftermarket on the renovation. And so, so there's a very strong, overarching story, and then a lot of daily, kind of concern and frustration in the market today.
That's quite interesting. And do you see actually? Do you see though that in the we talked about in Europe particularly that environmental issues are really hot topics. What about in the US?
Yeah, the environmental area, I think, is well. This will be a personal opinion. I think the U.S. is following Europe and the U.K. in kind of ESG. When we interact with foreign corporate buyers looking at some of our U.S. assets, some of the ESG initiatives, commitments, science-based commitments that Jason was just mentioning, seem to be very tangible. I think in the States, it's still evolving. In some cases, it's commitments that are being made to investors. In some cases, it's aspirational and it's an emerging, driving category. But I don't think it's the same. Having said that, ESG is becoming very important. First, the public companies and the investors in public companies, that has been a big push in the States. ESG elements for all of those, that has trickled down substantially into the larger private equity firms who are drawing capital from those same pools. And you'll see those having ESG partners, very significant ESG commitments. And now we're starting to see that trickling down, maybe not as formal, but in middle market private equity firms, it's now a topic. It becomes part of the investment decision-making process, or is there remediation or upgrade that needs to happen post acquisition? Going to what Jason had said earlier, do I need to plan for some additional dollars to take some steps to kind of get my acquired business up to kind of an ESG standard for that sector, that business?
Maybe if you could put some more color on that, saying that ESG is having an impact on the M&A. You've done some recent deals. Can you talk to us about, in your view in the States, what the effect is of this on, just not, and I will maybe start to push you on the pricing, but in terms of the buyers and in terms of the recent business you've sold, give people, come on, let's have some dirt on what you've got then.
Sure. Well, Brian, I mean, it's interesting, and it would fit in the built environment category. But we had the opportunity, a deal that I was working on last year, to almost conduct a very strong ESG experiment. We were working with one of the largest heavy lift crane rental businesses in the world, the 6th or 7th largest in the world, and certainly the largest in the US. But their heavy lift cranes were particularly suitable for installing wind turbine towers. And they had built a substantial market presence so that over 80% of their revenue came from wind power installation. Very E as in ESG. On the flip side, they're a very large rental company with very high annual capital expenditure requirements to maintain and grow their fleet. And I think many of us in the investment banking world know that private equity sometimes isn't as enamored or excited about businesses that have large capital expenditure requirements in their business. So that category often does not attract as much private equity interest as other categories. However, when we reached out of the market and we asked what their ESG emphasis was as a fund, and did it make any difference that our client generated over 80% of their revenue from wind energy, the most common answer was, we've never thought about investing in a rental company because of the CapEx. We have to take the book. And so the book uptake and the addressable market for that business was multifold bigger just because of that ESG element than it would have been had it just been a traditional crane business.
And what about some of the other ones you've been solding, Cali Bamboo, because of its specialty? How did that go?
Yeah, so Cali is a business that started with a couple of entrepreneurs in California, in San Diego. They'd been traveling and surfing, literally two surfer dudes. They'd been surfing in the Pacific, and they came across bamboo flooring, and they'd never seen it before. And then they had to come back to the United States and get a job. And they thought, well, why don't we start a company importing bamboo flooring, designing and importing bamboo flooring, which is obviously 100% sustainable. So the essence of Cali started with 100% sustainable. It has a culture of California lifestyle, active, healthy. And so, as you mentioned in the lead in, their products cannot always be 100% sustainable. So the CEO and the company's goal is what they would call shades of green. In every product category, they want to be the greenest possible so that the consumer and the storyline around Cali and Cali brands, resonate. It has kind of a cultural and a cult following, but also, and we may transition here in a little bit to talk about the S part of ESG, but also a company where the employees felt really good about the type of product that they were putting out into the world. And of course, that resonated and showed itself in employee retention, employee and productivity. This is a direct-to-consumer business. And so employee engagement is really important if that employee happens to be on the phone with a customer. And so that whole virtuous cycle spun out of the sustainability and creates a storyline around Cali. And when Victoria was looking to come into the US in a major way, they really saw Cali as a very unique business outside the mainstream with a direct-to-consumer element to it. But also that story, and we know from working with Victoria that they understand, as I think in their words, they can, everybody can give somebody a paycheck, an employee a paycheck, but can you create an environment, a storyline, an experience where they really want to work at that company? And Victoria looks at the Cali product. We know they look at their ceramic product and really type that, it's clay. It's the most sustainable product. It's very green. And they're a huge ceramic flooring provider globally. And they really love the fact that they're putting that type of a product out there. So on the M&A front, when Victoria was looking at Cali, that sustainability, that E and S part of the story really resonated with them.
It's interesting to use your currency. The green really does to green, an increase in green. Yes. It is, and we've certainly noticed that as well, that people really will pay more for businesses that they perceive to have. And, as Jason said earlier, they will deduct if they haven't, so if you aren't doing things like, just even at the most basic level to preserve heat or something or conserve, they'll say, well, actually, we'll need to spend $3 million, $4 million, $5 million and take it off the price, because we'll need to do it. If we own this, because your point earlier, the big companies say, we'll need to do something about this, because when you're a small company, you could be less green, but when you're a bigger one, the bigger ones say, we're going to have to do it. So you may as well get the benefit first, because you might as well get a multiple.
Yeah, Brian, I mean, you actually set up perfectly, because, there are few building products company bigger than Masco. And so if we, flip over to the Steamus transaction, so for the listeners, Steamus makes the highest in residential steam shower, mostly a retrofit, sometimes new construction, but often it's somebody's redoing their bathroom and wants a steam shower capability. Many people know the very strong health benefits of a steam after a good workout. And, we took that product to market, really trying to play up the green elements of it. The competing activity for taking a relaxing steam shower is to go get into a whirlpool for 20 minutes. And the steam shower for 20 minutes is going to use less than 1 gallon of water. And that whirlpool may use up to 100 gallons of water for just a 20-minute soak. So we really played up that water element, water conservation element. And then you mentioned digitization. It was a complex product and required very specialized plumbing contractors to build it. And they spent a lot of time, Steamus spent a lot of time developing a more simplified, miniaturized, remotely manageable, kind of an IoT capable business that they could sell online direct to the consumer or direct to the pro. And your typical plumber could install that product quite effectively. And so it expanded the addressable market, the number of customers and the number of installers that could do that. And really, that's one of the things that Masco saw, was the ability to take this small business and scale this globally. But in that process, we saw that Masco had both an ESG and also as a subset, a diversity, equality, and inclusion element of their due diligence work stream. So there was a whole portion of the human resource, the HR side of Masco involved in the due diligence, the planning, the first 100-day plan of what would need to happen to bring Steamist. And Steamist was a wonderful company that had high customer retention and a nice place to work. But Masco has, benchmarking, and they identified several categories that in the first year they wanted to work to, bring all aspects of the business, including the DE and I elements, up to where they would like to be for their targets.
Okay, and brings us almost seamlessly into the question then. Do you think that, to what extent do you think the labor shortages have brought the innovation, or do you think the innovation came first? Which came first, innovation or labor shortage? Or is there no answer to that one?
I'm gonna break that tie by saying I think labor drives reaction, and I think the scarcity of labor, the high cost of labor, is impacting all types of business and business models. One of those, if we go back to the crane side, in the heavy lift crane, there's a demand in construction now, more for tilt wall constructions, right? To pour the concrete wall portion formed on the ground and then use the crane to just lift it straight up, and put it into place. Well, it's just easier and takes less labor to work on that on the ground and lift it up than it did before to kind of build it from the ground forward. And so that we're seeing more and more businesses that offer an installed solution. So if I'm trying to sell my product, but I'm requiring the customer to go figure out a flooring, a window, a door, a deck replacement, then that's friction, because finding labor is very hard. And so companies that have vertically integrated or have always had an installed capability, they've taken the friction out of that purchase, made it easier for the consumer from point A to point B, and are taking share.
Got you. And what about the tendency? Do you think there'll be sort of winners, like with companies that can perhaps manufacture and install products? Because that is, it used to be quite a heavy distinction between somebody who was a distributor, somebody who was a manufacturer, and somebody who was an installer. It used to be very different. Well, and now it seems to be coming full circle.
You're starting to see a merger, a merger of those lines of manufacturing and distribution, installation, and you're definitely seeing that. Or you're seeing very large national installer networks, flooring installer, window and door installer networks that are partnering with companies and offering them a national footprint of quality and technology enabled, so that you can keep track both of what's being done, but also the consumer knows that the installer is going to be there within the hour. All of that activity, is taking friction out of the system.
Fantastic. And David, because I am conscious of time, I'm going to ask you one last question, if I may. Are there any trends, that we in the US building industry that we've not covered that you think might be interesting for our listeners?
Well, you signaled that you wanted to talk about valuation, and I think it's a good place maybe to bring those two together, right? Any other trends, and then to go on and answer the question you really were to know: how does this play out in valuation? I would say at this point in time, you're seeing valuations remain very strong, to the point of being no different than a month or 3 months or 6 months ago in technical fragmented building products categories, in residential and commercial HVAC, distribution and installation and manufacturing. Those categories are trading at all-time multiple highs, and we don't see that backing off in the, and again, listening to Jason, as you talked about ventilation, I hadn't thought about that, but as you change the built environment and you do that, that requires now a more highly engineered solution for the HVAC system. And that requires, companies that have that engineering skill set and drawing and design and skill sets in there. It's becoming more sophisticated, harder for the small mom and pop to keep up in that environment. So they're being acquired. Other categories like fire life safety, fire sprinkler systems, very technical products, we're seeing those multiples. When you look at things like component suppliers, we're seeing continued strength there, again, getting to labor. If a kind of manufacturer outsource some of their components to somebody else, free up some of their people for other activities. But we are starting to see, I wouldn't say we're starting to see valuations start to reverse, but we are starting to see some players, especially private equity firms, starting to step back from the building cycle and say, where we are in this cycle now, I think we'd rather not participate for a short period of time. And supply demand will always have an effect. And if the supply of buyers starts to shrink a little bit, we'll likely see that in some tightening of valuation in basic categories.
And I'm going to ask David, otherwise I had one last question. What do you think, say, something like an HVAC business, what kind of multiples would you typically see on this? And what would you say if it was, and if I call them for these purposes on the greener side, as opposed to, say, something that's, really not green at all, what kind of numbers are we looking at?
Right.
Well, LTM, EBITDA.
Again, having had a chance to listen to Jason, there's some elements of that I'm only putting together in real time here. But as he mentioned in some of their activity in water filtration and heat, the efficiency or inefficiency of that HVAC system is going to have a big impact on your total energy consumption, right? It's highly efficient, highly managed, then you have a lower footprint. We are seeing those categories in HVAC distribution installation being in the high teens, mid to high teen of multiples. Same thing for fire life safety type businesses, approaching 20 times, where smaller normal building products businesses continue to trade probably more in that 7 on the low side to up towards a 10 on the high side.
Yeah, and I'd agree with you. And we're actually seeing some building products companies that actually, when you call them building products, because they've got data, then actually suddenly they're no longer getting multiples of EBITDA. And this is an area where some people begin to get a bit of a nosebleed in the construction industry, multiples of revenue, where, actually they've never seen that before. But actually we're beginning to see people, because data is king, and with the monitoring and that category is becoming more and more exciting, that people want data, because if your building's green, it might be green on Monday, but 3 years time, is it still doing what it's meant to doing in the way it's meant to do it? And somebody's got to be testing that, and somebody's got to be controlling that. Indeed. And somebody's got to be giving out the data that said this form of construction results in this output. And that, if you've got enough of that data, that is really useful, because everybody wants it. So yeah, it's quite exciting times. I'm conscious that we're getting towards the end. In terms of questions, we've got a couple of questions, and I was saying that there's a couple of questions, and I think if Jason can come in on this as well. Jason, if I can ask you first, in terms of the aging workforce in the industry, how does the industry attract younger talent? Because in my day, we were all very excited to wear a hard hat and get pictures of us as bankers on a building site. But I'm told that's not as exciting as it used to be when I talk to my children. So how do you bring them in?
I think it is as simple as making it an attractive place to be. Make it as modern and as high tech as any other engineering discipline, because there is a lot of core engineering science, as we know, in construction, but the tools that we use to get there are not always seen as sexy. Bricks and mortar and plumb lines and spirit levels are not as sexy as BIM and virtual reality and augmented reality to the new generation. The opportunity to design and construct in a factory is a lot more attractive to many of the young generation than being knee deep in mud on a cold December day. So it's about that transformation as to how we go about things, and perhaps increasing the pace of change. When it comes to changing the way we do things in construction, we are notoriously slow. Um, and whilst pace is picking up, there's still a lot of work still to be done, perhaps, but also still to come. And you can see that activity starting to be generated now.
And it's interesting, we got asked another question, and it's something David and I touched on, the supply chain sort of merging, and you mentioned it with the bottles, that you're vertically integrating. We've seen other people change the supply chain, radically, whereby things you never thought, a manufacturer becomes a distributor, or a distributor, more importantly, a distributor becomes a manufacturer, which is, you never used to see. There was almost like a line in most industries. Do you see that, this idea continuing, because new business models, because we have seen this, and I'll raise one or two in a minute, but do you see that, David or Jason, continuing this blurring of lines we discussed?
Yeah.
Maybe take that one.
There's a saying, necessity is the mother of invention, and and there's a lot of businesses that are facing really challenging necessities in how to, as Jason mentioned, with how to control their access to recyclable product. And over and over again, as you mentioned, distributors looking for to get control over, the key elements of product, where if they have it, then folks will want to buy that product and everything else from them as a distributor. And so yes, those lines continue to blur.
Yeah, we've definitely seen that, and we've also seen within the distribution market, them, for example, saying, look, we want to be specialists because we want to get EBITDA margins above 15%. You can't get that if you're distributing, say, the proverbial lintel. They're just not available. And also, where's your added value? So doesn't, it's not a great added value. Now, I guess we're in an unusual time that actually having the product today, if you've actually physically got the building product, that's added value today, because you can't get hold of them. But these are very, I must confess, this is the fastest change that I've seen in the building industry in a very, very long time. And as I know you can say, well, and I think Jason commented that, the whole world is pretty slow in building. The building world is slower than most, but I think it's catching up rapidly. And I think it's all, given the effect of the built environment on the, the ESG, the percentages are huge that the built environment's responsible for on the environmental side. So I think it's exciting times, and the winners will be companies like, I'm sure that Genuit and companies like that will be the winners, because it's only going one way. It's not going to go, it's never going to retreat. So the key messages from today really are: new areas opening up, everything's changed completely, that the winners are going to be really, in terms of the winners, it's going to be, in terms of sustainability, there's only going to go one way. Government regulation is going to increase. Even, even with America, it was mentioned that it was less with the corporates, but the investing entities are putting the pressure, and customers will put the pressure. So, the trend is only going to go one way. And I think that we are going to see investors simply unwilling to acquire companies that are actively harming the environment. But I think it's really important. The big change for me, or one of the things, talking to people in the industry, is one of the most fundamental changes. People talked about ESG. Now they're living it. And Jason's given us some really good examples of how they're genuinely living it. And perhaps David's given it in our language, how it's genuinely bringing in more buyers and higher prices. So the winners, are going to be businesses that continue to focus on this. And it's, and in every way, when I say in every way, it's not just putting it on your website. It's not just talking about it, it's really doing it. And if you do that, the buyer pool is going to increase, and you will attract a premium value. So that's kind of everything we have to say. But if any of you want to follow up or speak to either David or myself, we've left it up. And I can't thank David and Jason for helping us. And everybody, thank you very, very much for your time.
Thanks, everyone.
Thanks, everyone.